Hello everyone. As always, I just want to check if you can hear me, if you can see me. On my side, everything looks fine. Sound check, microphone is all right. Can you guys please respond? See, there's 20 guys at the moment. So if you can hear me, you can see me. Yes, yes. Edom, Godfrey. Right. Okay, let's start. It's always good to make sure that other guys can hear you. Right. Today we're going to talk about the moving average string strategy, but this is not like the first one, all theory. This one we're going to focus more on the practical. I want to start you guys. I've got a third part also. I call it the moving average string strategy applied, where I'm going to focus more on just the application. Today is like an intermediate. So we're going to quickly go through the text or the just a summary, not all the slides, because I want to save time. And then I've added a couple of things about mindset, about your mental framework, to help you guide to sort of like a transition into applying this, and to applying it also as well as in line with technical analysis, which is looking at the charts for a purpose. Your purpose is to identify the next trend in its early stages. So I want to get all those things together. And also a little bit about mastery. Yvonne, yes, thank you for your reaction there. So a little bit about mastery also. What is the process you have to follow? A lot of people jump the gun. They try to take shortcuts, and then they just don't get traction. The cash flow doesn't ever pick up. They get stuck in what I call the entertainment trap. So let's start going. Okay, the agenda. Like I said, I'm not gonna touch on all these things. This is the complete one. This is more practical. So introduction. Okay, always, guys. There's two parts in online trading: the business part and the entertainment part. Entertainment part is about all the adrenaline rush and taking shortcuts and trying to make money as fast as possible. It does not work. It's a trap. You will not make money, period, because you are not prepared. Your mental framework, your mind is not prepared. You need a solid foundation. Very quickly, what is a solid foundation? Business principles. You need a simple, well-defined method. You need proper money management. That's what I'm going to give you and demonstrate to you today. And then the most important part, I would say almost 95% about it, is your mind. Training your mind, getting disciplined, working the emotions out of your system. When you take a trade in the end, there's no emotions. It's just your method in application, your money management in application. You see it, you do it. It really becomes boring when you do it well, guys. So, and that's when your cash will also start going. In the beginning, it takes time. Yes, like I always say, the long road is the short road. The long road, preparing a good foundation, that's the short road to success. The short road, shortcuts, trying to get rich quick, doing this for entertainment part is not good. Your cash flow will not pick up. Right. Very, very quickly, two ways. Fundamental part, if you want more detail about that, so there's some stuff on some educational videos on the website about that, as well as part one deals more extensively with this. This is about news. We do not worry about the implication of news. Bottom line for us, we worry about the time, yes, because it's news when there's big times when there's big news, that the charts go up and down, especially in the short term. So we have to be careful. But what the news per se say, we're not so interested. We're interested in what people do, and that you can see on the charts. That's why we look at the charts. Technical analysis, very, very quickly. It's a study of market action using price charts. Why? If you cannot answer that question, then you will also get stuck in the entertainment part. Why do we look at the charts? We look at it for one purpose alone, to identify a new or the next trend in its early stages. That puts the risk reward in our favor. Okay. Why does it work? Three principles. Market action discounts everything. The price reflects all people's research and everything. They've done their research, they're committing. So it's very important. Prices move in trends. In all price charts, you see that it's based on human patterns, human psychology, and we can use that, and history repeats itself. So those three principles make technical analysis very, very effective. So effective indeed. In fact, that even the people that trade, professional guys that trade your pension funds and your annuity funds and those things, they use technical analysis. So right, so technical analysis, exactly like I said, we wait for a trend, and then when the new trend, just highlight that, when the new trend starts, our method must show us somewhere to get involved, and when the trend starts then and we're in, it's either going to stop us out with a little risk, or it's going to move in our favor, and then we decide we manage the trade based on our method until the beginning of the next trend. We take our profits, we get out, or we are out already, depending on our method, and we get another signal and we manage it. Okay, this is overview, very important. You have to understand this very, very deeply. Right. I'm not going to go over the complete spring with the moving average spring strategy. That's in the first one. I'm just going to quickly review the rules. If you guys don't know what this means, then you have to go back. You have to listen to the first one. That's where all this is explained. So I'm not going to explain everything again. If you are here and you are new, you don't recognize this, then just send me an email afterwards. Then I'll send you the links to both the previous one, and it's on the website also, on the recorded webinars when you log onto your profile. And then I can send you this one. Then you can just listen to it in sequence. But it should make sense if you have played around and if you know anything about MetaTrader and so on. Okay. First thing, very important, we want to confirm trend. A trend breakout, it must break out of the trend. The price must be above the 34 simple moving average. We're going to look at the graphical part now. Must pull back to the 15 simple moving average. And then the second entry, the second candle after the close of the fractal signal, or the fractal arrow, then that's our entry. And just before, while we're waiting for those second candle to close, we just check is the momentum right. Exit rules, always exit. Exit if the market doesn't do what you think it's going to do, and the purpose of that is to protect your capital. And exit to take profit as the movement moves in your direction. We've got what I call a low probability or a high probability trading strategy here. That means there's a high probability that the price will reach 1-to-1. If our risk is 10, then our first take profit is at 10. There's a high probability that it will get there. We take part of our profit and then we take the rest at 1-to-2 risk reward ratio. If our risk was 10, then we take the rest at 2. If I decided to only take my risk or to only take my profit at 1-to-2, that would have been a low probability trade, because the probability for the chances that the price will move that far is lower than the closer one. So there's two types of strategies. I'll talk a little bit about that. This is definitely a high probability, lower reward type of method. Right, so let's just double check. As you guys know, have seen the method. There's a downtrend on this side. Can't see it here. We're gonna see more examples now as I do it on the live charts. There's a downtrend here. It's all our indicators. It breaks through the 34, pulls back to the 15. It makes a arrow, a fractal arrow. The fractals are is an indicator to help you to see reversal points. So there's a reversal point there, and when it reaches the second arrow, the second candle after the arrow, then that arrow is fixed, and that's our entry point. Right, our stop loss is at the 34 moving average, gives us a little bit of room. Sometimes it's closer, sometimes it's not. It's dynamic. The market is dynamic, so I like to work with dynamic entries and stop losses and take profits, right? So that dictates our risk. Okay, that is our risk. And our first take profit at 50%, we take half the position off. That is at 1-to-1. So if that is 10, our risk there is 10, then at 10 pips reward, we take half the profits off. And as you remember, what happens if you take half the profits off, this becomes a break-even trade. Just to very shortly review that, let's say your risk here is $10. When it gets to $10, you take half the risk off. You've got a $5 reward there, and you have got $5 risk left because you took half it off. That means in effect, you've got no risk anymore. 5 reward, 5 risk, 0. So even if the market comes down and takes you out there, you've got no risk anymore. It's very, very nice on your mental framework. Takes a lot of stress out. You can start looking for another trade. Okay, and then very quickly at 1-to-2, we take the rest of our profit. In this case, it worked, so it's not going to work every time, right? In this case, it didn't work. Everything was correct here. It was a downtrend. It broke through, pulled back, went up, and then immediately closed us out. And we had a loss, yes, but it was for a purpose. We planned this thing. We protected our account. Again, it would have been a predetermined account. I like to trade with 1-2% with my account. I advise people like that as well. Makes the stress, the sleeping levels very, very, very nice. If you trade with huge chunks of your account, you're going to have difficulty. So difficulty, you're going to have to look at the trade the whole time. You can't sleep, you can't work. You have to, you want to check it the whole time. That's not good. It's not good for the rest of your life, relationships, all sorts of stuff. Right, very quickly. So there we were stopped out. It's going to happen. You have to prepare yourself. Talk a little bit more about that later. Right. Short entry, exactly the opposite. Same rules, just exactly the opposite. So I'm going to go very quickly over them. Right. Short exit rules, exactly the same. And we get practical here. Right. As you can see, we're going to look at examples now. There was an uptrend there, broke through, pulled back, gave us the arrow. There was our entry. There was our risk. It's our stop loss at the 34, dynamic. This time it's closer to the price. Risk there, reward there. And there we are out with our profit. Not always. There it was also well. There was an uptrend there. And they broke down, gave us an arrow, but it immediately went back and took us out. So talk about a net profit over a series of trades if you're doing things right. Nobody ever knows what the next trade is going to be, what the next move is going to be, up and down. We just have the odds in our favor because of those 3 principles. In this case, you were stopped out. Right. Very quick summary. Our goal. Why do we do this? Obviously, we want to make a profit over a series of trades, right? So we've got a simple, well-defined method. We've got proper money management. That means, in the other terms, I look at some of the questions now when I finished with this. Our goal, in other words, just to repeat it, so that you exactly know what I mean. We're not into this for entertainment. This is cash flow. We want to make a profit. This is a business, a micro business, I like to call about it, because the overheads are so little compared to normal businesses. And this is the 4th industrial revolution business. If you don't know what that means, Google it. Very, very interesting. Okay, our goal, we want to know exactly what an entry looks like. We don't want to guess. We don't want to wonder. We want to know, right? When we enter, we want to know where we're going to take profit. Simple, well-defined. And where we will get out. We will protect our account when we are wrong. Right. We want to know exactly how much we are willing to risk. Exactly. Not guess, not maybe, exactly. We work it out before the time. And we implement it every single time. Part of the mastery process. We'll get there now. and we completely accept the risk on every trade. We're not going to mess with that trade. We test it before the time's enough to have confidence that the odds is in our favor. We know over a series of trades, if we consistently do this, we will make a net profit, right? And then it becomes like one of my mentors said, like watching paint dry. It becomes boring. That's when you start making money. When it's still exciting, you're jumping around, all sorts of things. You haven't sorted yourself out. Your mind is not strong yet. Then it is. It's not boring, but it's normally also the time when you're paying a lot of school fees and you're still struggling and your equity curve is not going up. Right. Let me see at this point. There's some questions here. Oswald says, I trade Forex lines, 7 indicators. And right, which are the market turning points, right? I'm not going to discuss other methods here now. 7 indicators, Oswald, I think might be a little bit too much. Reason for that is if you know about how your brain works, the switches that they have, the decisions they have to make, the more indicators you put, the easier it is for your brain to become locked in a situation where you have decision-making fatigue, where those indicators might contradict each other, where you get analysis paralysis. So the less, the better. But anyway, so you'll see what I mean when we go further with this one. Right. Good morning. Kanan said, I've missed the first part of the Spring Move strategy. Can you send it to me? You can very easily get the first part, guys. You log onto your FXTM website, and then you go to the webinars and the recorded webinars. You'll see it there. It's near the top. So it's been recorded, so you can listen it. This one might be posted there, might not be. If you want to listen to this one again, you can just email me. Or you can put your email underneath here, and then I'll send you the link. That will be on GoToMeeting. So what you do is you put your name and your surname in and your email address, and then you can watch the seminar or the webinar again. Right. When the profit hits 1 to 150%, would it not be better to move the stop loss to break even? Right. Dean, I'm going to discuss that one a little bit later. So automation is the answer. Boring strategies as well. Yes. If you want to automate your strategy, you're welcome. That's another way of trading. It's program trading, but it's also got its disadvantages. Its advantages and disadvantages. So the human brain is an amazing tool, and the gut feel that you develop when you train and you train and you train is something that cannot very easily be replicated in a computer. So. But yes, it is another way. This is not we're talking about this. My indicators are all outside the candle stream, much cleaner. That depends on you. There's many simple, well-defined methods, and that's part of what makes Forex so difficult. Is you must choose one. So in the beginning, take your time, choose one that fits in with you. It's like going shopping for a shirt or something. You look at all the shirts and you search until you find one that looks nice for you, that fits and everything. So just keep it simple, well-defined, and with proper money management. That sets a lot of guys back. It set me back a number of years because I didn't realize how important this the higher probability type of trading is compared to wanting this huge risk or this huge reward on each trade. And then it means you're trading actually very low probability trades. We'll discuss that a little bit later also. Okay, yes. Okay, guys, there's a couple of questions about the fractals and so on. So that's all answered in the first one. So I'm not going to waste too much time talking about that. I want to show you guys. I want to show you how this works. I want to show you. Okay, so let's go on. Okay. These guys that say they missed a few minutes. First few minutes, just email me or send me an email here and I'll send it to you. Right, let's go on. Very quickly, risk management. I left just this one in because I want you to be able to see. If you trade with large portions of your account and you lose, how difficult it is to get back. If you lose 15% of your account in your consecutive trades, you have to make 17.5% consistently just to be at break even. Okay, still attainable? Yes, perhaps. 30%, 42% of your account. You have to consistently make in the next trades. That's after you've lost 30%. So you already have some serious issues because you've lost. Now you have to consistently make 42.86% just to get back to break even. Very, very difficult, guys. And from here on, it's almost impossible. So that's why I always advise the guys trade with small increments of your account, 1%, 2%. All the big guys, all the mentors that I had trade like that. Why? Gives you staying power. And don't worry about the money. In the beginning, it might be less, but as your account grows, the money, that 1% becomes bigger. So it also forces you almost to stay calm and to take this thing slow, to make your mind strong. Your mental framework is a very, very important part. In fact, it is the most important part by far of trading. This is part of this, why I make this webinar and why this is an intermediate. I'm still talking here. When I talk about, when I have the third part or the applied part, I'm just going to focus on the application part. So this is the interim part. So it's very important. Okay, very, very important, guys. Mindset. Just a few things I want to discuss with you. What defines a good trade? I hear too many traders, and it's normally guys that are locked in the entertainment trap and they haven't got a good foundation. They define a trade by I've made money if I've lost money. So let's see, let's talk about this. What defines a good trade and what defines a bad trade? Very, very important. If you define it wrong, you're in for a tough time. And I'm talking about an experience here. Okay, what is a good trade? Is it when I make money, or is it when I follow my plan? What do you guys say? Just give me a hint. I need some feedback from you. I just want to see if you can, if you're gonna see this. There's a question while I wait. Michael says here, how many months, years do you recommend for backtesting this strategy? On 1 hour, you can trade the strategy on any time frame. I'm going to illustrate it to you now. And no, it does not need to be months or years. It just needs to be consistent, focused hours. The more of them you can put in, the quicker you will master it. And it's about mastery we talk here. That's why part of the presentation is what is the steps to mastery? How do I master this? Mastery is the quickest way to do it properly to get your cash flow going. And this is a business. This is not a entertainment thing. So we want to get our cash flow going. Right. Most people are correct. A combination of both. One person said, no, it's definitely not a combination of both. It's definitely, I'll explain now, when I follow my plan. Let's just look at the other part and I'll explain what is a bad trade. Is it when I lose money or when I do not follow my plan? Since you've heard the first answer, you obviously guess what the second answer is if I do not follow my plan. Guys, that means I can have a good trade and lose money, as well as I can have a bad trade and make money. When I didn't follow my plan, that is what the definition can be. I can have a bad trade because I didn't follow my plan and accidentally, or luckily I made some money. But consistently over time, if you do not follow your plan, you are in trouble. Your equity curve will suffer. And don't take my word for it. Just try it yourself if you like. All right, okay, so it's very important to define a good and a bad trade. It's about following your plan. Nobody, and I repeat, nobody knows what's going to happen even 5 minutes from now. There's just too many variables, guys. There's too many people with different size pockets, with different risk profiles, with different strategies, trading in a market like the big liquidity markets that we're trading in Forex. Nobody knows what's going to happen. What can you know? You can know what your method is. Exactly. Like I said, what is our goal? To know exactly where to enter, exactly where to protect your capital, exactly where to take your profits. That we can know. That's why the plan is so important. And to apply that plan consistently over time, plan obviously under the money management, right? Another thing, I already touched on it, probabilities. When I started, guys, I wanted to make a lot of money with each trade. The result is I traded exactly the opposite than this. I wanted high results, and I let my trades run. The probabilities were just low. I didn't understand that the probability, the chances of that trade, which I want to catch the whole move off, the chances of that trade going all the way is low if you look at a series of trades. If you're willing to lower your reward expectations, what happens is the probability of that trade goes up. Probability, the chances that you're going to get that first reward, that first target. And if you start to understand trading really, really deeply, then you begin to understand that trading is nothing else than risk management. The whole time you're just doing risk management, because what you know every single time that you enter a trade is precisely how much your risk is. In my case, 1%, and that's what I advise you. You know exactly what your risk is, so you do risk management. Even your stop loss, obviously, if you're expecting an uptrend and the market goes down, then you are wrong, and you protect your account. So you're going to go out and lose that. So, but even if it goes up, there's a high probability it will go a little way up. If you take profit like I do here, then already your risk is much lower. So in a series of trades, it makes a dramatic difference. Okay, so I'll look at a couple of questions again later. I'm just going to finish this part. Right, but that said, I know guys that do like to trade low probability, higher risk. That is your choice. Nobody can force you to do anything. Just back test whatever you do very, very, very thoroughly. And that's a nice thing about MetaTrader. You can very easily, you can even program algorithms. You can use the strategy to test it, but do just test it. I like the manual version, so I go on old chart because it strengthens your mental framework. It strengthens what we call a neurological tree, the neurological pathways that cluster together as you learn and grow, learn and grow, learn and grow. Okay, part of the mastery process. Right, and now it's your turn. Right, what does that mean? I can give you everything. I can give you the method that I'm going to, like I've already done. But you have to, and the money management as well, but you have to take that. You have to take ownership of it. You have to make it your own. All of you should know Bruce Lee, and you should agree that he was good at what he did. He was a master. He had an interesting quote that said, "I fear not the man who has practiced 10,000 kicks once. I do, however, fear the man who has practiced one kick 10,000 times." And the principle that he touches on here is focused practice. You take a simple, well-defined method, one kick, guys, and you practice it over and over and over. You practice it plus the management as well. You practice that combination until it becomes part of you, until you can do it in your sleep. Focused practice that makes your mind strong, your mental framework. That's why most of the guys fall out of the bus. They try to take a shortcut with regard to the learning process, the mastery process, and you can't shortcut it, period. It might work on a demo, it might work with low lot sizes, but the moment you get serious with your business, when you take your lot sizes up, you get stuck, right? Michael Douglas talks about, not Michael Douglas, it's Trading in the Zone. Forgot the author's name now. He talks specifically about this, the mental framework of a guy, the mental framework of traders. How does successful traders think? Right, trading in the zone. Okay. Right, so now I tell you all these things. What do you do? How do I do this? How do I begin? How do I take this? That I've seen the first part now, and I'm looking at the second part. What do I do to get my business off the ground? To start actually to get my cash flow going, to start making a profit. Right. If you guys remember what I talked about in the beginning, when I talked about the gift and the first part of my other one, when you learn something, it's like planting a tree. The power of the tree lies in the roots. You have to actively build your root system, your knowledge about what you're doing. Warren Buffett says it very well. He says that when you start something, when you want to invest your money, you want to start a business, you must do it within the circle of your competence. You must spend time to get to know what you are doing, and that's the mastery process. All different words, same thing. A very complex or a very thick root system for a tree causes it to be firmly grounded and to be able to produce a lot of fruit. You want this business to be firmly grounded mentally. You want your mental framework to be strong, and you obviously want profits. You want it to produce something for you. So this is what we're going to do. It's called the mastery process, and it's generic. It's the same for every single thing you do, from learning to walk, talk, any skill that you master, riding a bike, riding a car, riding a motorcycle, becoming a lawyer, becoming a doctor, anything. Skills that you have to learn goes through the same process. And you cannot shortchange this, guys. You cannot. If you try, you just get stuck and you pay the price. A very quick way to explain this is to say, when you start, you don't know a lot, right? When you start trading, you're not sure what to do. You don't understand everything. Then you get that, oh, okay, I like this in the first time, and I have to learn. I want to learn more about this. So, and what happens then is you start the process of trying, learning, and growing. You try, you learn, and you grow. Rinse and repeat. You repeat that over and over and over and over again. And each time you try and you learn and you grow, you become more proficient at it. In your brain, what happens is when you know little or nothing about something, there's not a lot of neurological pathways. As you learn through your senses, as you repeat, then what happens is neurological pathways are laid down regarding that specific issue. And as it comes together, as you repeat it and you repeat it and you repeat it, it becomes like neurological trees, little trees. And the more denser those trees are, you can also compare it to the root system. The more dense that root system is, the more automatic that comes to you. Just remember when you started to ride a bicycle, you wobbled and your balance wasn't right. As you practiced, after a while you could just get on and just ride without thinking. But there is guys that have a passion for it and they just keep on learning and growing. And these guys, I've seen video clips of guys hopping on one wheel and hopping between rocks on one wheel. They get to a higher level of mastery. So with most skills, you just go to where you are proficient somewhere, but you do get guys that go on, especially if it's your passion, then they become mastery. They become a master at it. They achieve mastery. Right. So what does it mean? What does it mean for me? I want to master. I want to become a trading master. I want to master some method, some strategy that can get my cash flow going. Right. First step is get background. Exactly what Warren Buffett says. Get the history, the basic terminology, and you get all those things for free on our website. There's a lot of stuff, short videos, long videos. What is Forex? Go and listen it. Listen to it a couple of times. The more understanding you have, the better your root system is, the easier this thing is going to work. And don't force it. You can't force your brain. You work at a certain pace. So, but on the other hand, the more time you put into it, the quicker it will happen. So get background. What is it? There's a couple of different routes that you can use. Right. What is the next step? You identify and then start practicing a strategy. Remember, simple, well-defined strategy. Not complex, too complex. You have difficulty. Your brain, you get analysis paralysis and all sorts of issues. So decision-making fatigue. Simple, well-defined, as well as proper money management. I prefer, like I said, a high probability strategy, but you can decide that. Yeah. All right. So what do you do then? First, you start on paper. You look at that strategy, look at the different strategy, and make sure it's in line with technical analysis. I'll explain now. Technical analysis, like I said, identifying, using charts to identify a new trend in its early stages. That's why our risk-reward ratio is in our state. This is loosely based on technical analysis. You'll see now how my spring strategy fits into this. But here you see a trend, and the trend is broken, pulls back, just like I explained with mine, and then it's a possibility of a new trend that is starting. That's why risk-reward ratio is the best. right? So you draw it by hand. So in the first place, you understand what a trend is. Also explained in more detail in the first one, because you don't want to, you don't really want to start trading out of a range that is too deep, because you don't know what way it's going to go. It's very nice if it's let's say for instance, it's a downtrend. It stops, you know, there's a lot of sellers that got engaged there, and they couldn't drive the price lower, and now they're going to take profit, and buyers are entering the market. The price is very low. At some stage becomes a bargain, and people want to buy when it's a bargain. Sounds familiar? Okay, I see I've been going a bit fast. Let's see, there's a couple of questions here. We've got an hour here, guys, so I see a lot of questions that I might be answering later. If I don't answer one of your questions, just put your email here or email me. I'm going to put my Skype address also up later. You can email me there as well, or contact me there. Right. Over the plan. Backtest. Oh yes. Let's get to that now. So I'm going to answer that question. Right. Just I see somebody saying I want to learn algorithms. That's a different story. So I'm not going to talk about it here. You can find out Google. There's lots of different strategies, training places where you can do that. Tricky, but go for it if you like. Right. So what have we done here? We're busy with our mastery process. We've gotten some background, and that's a continual process. Like when you're studying, give yourself time. Block when you study, for instance, for a diploma or a degree or something. You plan time to study the different aspects. You don't just focus on one thing. And that if you do that, then your foundation will not be right. So get your background, learn what is pips, how does all these things work, how do you work out your profit, and stuff like that. So get that background. Next step, on paper, you practice. So you've got that mental image, that mental imprint. What am I looking for? Right. Next step, we go to our old charts. Right. There's no stress. There's no money on the line here. We're just busy training our brain, guys. Just like with any skill. I remember that downtrend. What I did is I just took a normal chart and I used the tools you have to know and to explore how to know how your MetaTrader 4 works. You have to play with it. You have to try and learn and grow. So I took some tools here. This is a downtrend, as you can see. It's not so perfect as when you draw it, but that's just now you're making the transition between the simple to the little bit more complex way that it's structured in the market. That your brain will see the things, start to see it very easily. So now you practice an old chart. You go on, and I'll go to your chart now and just show you as well. So you go and you draw it in. You're training your mind to see this. There's a downtrend. It breaks out of the downtrend, it pulls back, and then there you start. Right. So it gives you there a few options. In this case, there's your entry, there's your exit. That's how my moving spring strategy works. You wait for that breakout. Right. We'll look at it again now. Okay. Now you're practicing this. Why haven't I put the spring strategy here already? I want you to see the trend. I want you to see the trend and the breaking of the trend. That is what technical analysis is all about. In the end, you put in the indicators just to make it visually more easy to see. But if you cannot see the price, if you don't understand the price, then you're in trouble. So you have to understand what is technical analysis. Identifying the next trend in its early stages. That's where you get involved. Warren Buffett's got another nice quote that says, the markets are instruments for transferring funds or money from the impatient to the patient. If you get impatient here and you jump in, then yes, you will pay. So, especially in the beginning, once you get more experienced, you might get some other more complicated methods, strategies. But in the beginning, to get your cash flow going, keep it simple, guys. Incidentally, all the mentors that I have had, they keep it simple. It seems to work the best. Okay, so what's our next step? We've got it on paper. We've got it on old charts. Now we have our demo account and we start practicing. We start practicing what? We play games now in the demo? No. This is like a fighter pilot training to fly the correct or the real plane. We are preparing ourselves mentally to trade with live money, right? So what did we have here? We have an uptrend in this case, goes up, moves up, and then it breaks and it pulls back. So there you practice then to place your entries. And you're going to make mistakes in the beginning, but remember this is a demo account. So you make your mistakes. In the case of a fighter pilot, you crash your planes in the demo, in the simulator. This is like a simulator. So that your skill level can go up, so you can learn and grow. And when in the simulator you don't crash anymore, you become proficient, then only do you move on to the very carefully to the real plane. It's the same here. People get it wrong with the demo. They play it like a game, and then they actually not doing themselves a favor, because they're getting bad habits that they're ingraining and that they're building up, and then they wonder why when they go to a live account they have difficulty sticking to a plan. Sometimes they don't even have one because they fall around the demo. They use it as a game. Dangerous to do that. You're planning, you are executing, you're practicing your execution. And you keep on at a demo, going back and forth, old charts demo, until you can do it flawlessly, until you can make a net profit over a series of trades on your demo. If you cannot make a net profit over a series of trades in your demo, you will not do it on your live account. I can guarantee you that. Because with your live account, there's even more stress. There's more tension, there's more stress, more forces that work on your mental framework. So you have to sort out the issues in the demo, the execution mistakes, the accidentally doing something wrong. You practice that out of your system on the demo. And it doesn't have to take months. It depends on how much time you give. In this case, like I said, there was an uptrend. It broke out of the uptrend, pulled back, and now I have an entry there. I use the stop order here. In this case, 2 stop orders because they take partial profits. So my first one will take profit here. Then I've got a break-in trade. Both of the stop losses are there. And there's my second one if the market goes so far. Right. Okay. So now you've practiced on your demo. You're doing it only when you're flawless on your demo. When you can actually make a net profit on your demo over a series of trades. Then you go to a live account with small lots. I do not care how much money you have. Keep it separate. You're busy training your brain, your mental framework. You're making your mind strong. This is the purpose of this thing. And you keep on trading the same way. You make a profit, you push it up, and then incrementally take it up to there until you are trading with 1% of your total portfolio, or whatever you decide. That's just my opinion anyway. Right. So this is in short the mastery process. See, it is an interim one. Time is catching. Right, guys, very importantly, you do not have to do this alone. If you try on your own, it's like gymming on your own, difficult. Motivation, you get your dips. There is people that are willing to help you. Find people, contact us. I'll give you some time here to just write down my email. I'll put up a little bit later again. This is my Skype ID. We've got Skype support groups. What's nice about Skype is we make an appointment, can be ad hoc, it can be regular. I've got guys that we've got an hour meeting every week, and what they do is they've got that, they've repeated, they're busy with the mastery process, they're practicing it, and they get it wrong, they get stuck. We talk, I get them unstuck, I help them, and then step by step they make progress, right? The mastery process, you can't force it, you take step by step. If you've got a lot of time, you can put a lot of time in, and it's going to obviously go faster than not. But yes, okay, that's enough time. Okay, very quickly, just some answers before we go to the practical demonstration. Let's see what I get here. Oswald, thank you. You say there's some very good tips here. Does this work by trend or moving average? Godfrey, trend and moving average, I'll explain now, is just the, I see somebody's already knocking on my door here. It's good. All right, Skype door. You see the trend either by drawing in trend lines, or moving averages are dynamic trend lines. Okay, so that's how it works. So I'll show it to you now. Okay, download old charts. No, you don't download the old charts. You just go to MetaTrader, and then you can you switch off the settings. I'll show you now that that keeps the chart at the end, and you can go back. You can scroll back. I'm gonna show it to you now. Right. Okay, back this time. Right. Let's get going with our practical. Right. Remember what I said. This is our first step. What I'm looking at, I'm going to look at any chart. This is a Euro USD 4-hour chart. What I want you to see, and what I'm going to draw in now. That's before, that's when you start practicing with your method. But before you start practicing your method, you don't want to depend on the indicators. You want to see the price. You want to understand the price. Remember, it's about trend. So what do we see here, guys? We see a uptrend. What do we see here? We see a downtrend. Do you see this? What do we see here? We see an uptrend. What do we see here? We see a downtrend. It's not as perfect as when I drew it there, but it's the first step. There's always, the market moves in trends, right? So you want to see this. You want to train your brain to see it, because it's going to help you with where to enter. Right, and there's no place now. Remember, we were working with charts. That's like when you get your bicycle and now you're trying. You should not expect yourself to make wheelies and all sorts of things. You're just starting to get to the feel of this. You're beginning. You put on your training wheels. This is part of the training wheel part. You're not going to fall over. You can even ask your dad, your mom, whatever, your brother or sister to help you, to stabilize you. You're just beginning the mastery process, right? Step by step. But the more you practice, very soon you get those. You take some of those or one of those training wheels off, and you can ride without it. You keep on practicing. You keep on practicing. Let's keep on practicing here. What are we looking for? Looking for technical analysis, identifying there's a trend, identifying the next trend in its early stages. What do we see there? The next trend. There's lower lows, lower bottoms, lower tops, lower bottoms, and there is a higher bottom, a higher top. So that might be the beginning of a new trend. Okay, very basic. So we're trying to see it. We're training our brain to see it. If you cannot see this and you're depending on indicators, then also you're going to have difficulty. So before you use indicators, technical analysis, identifying the next or the new trend in its early stages. That's what I'm training myself to do here. Right, what do I see here? Don't try to look for picture perfect stuff. Just look for the easy ones. If you can't see it, you can't see it. Go on to the next one. What do we see here? Some guys asked me why did I include this in the spike? The spike in this downtrend. Why don't I just stop it there? Because it's going down, a lower bottom, a lower bottom, a lower bottom, a lower bottom, and there is my first chance to enter the beginning of the new trend. Right. Can you see what I see? I want you to go and practice this before you start looking for entries on your method. You must be able to see this. The indicators are going to make it a little bit more easy, but I draw this in now, and now I'm going to start putting in the stuff. Right. What do we use? If you don't know, go and check the first one. Firstly, we use the 34 moving average. Right, so we put in a 34 moving average. You can choose any color you like. Let's lose red here. That's our 34. Now, what can you see? Let's zoom out a bit. What do you see? See that trend lines that I drew in? Oswald, I think, asked. See those trend lines? That is my trend line I drew in. This is a dynamic trend line. Longer, a little bit of a longer time moving average. Right, so that's the purpose of that. Is to help you to identify those easy. When it breaks through, it shows you what might be the beginning of the new trend. Okay, so now let's add the next one. As I said, the next one, the purpose of the next one is to help you with the pullbacks. The market moves in trends. It's a 15. Oh, no, sorry, that must be simple. Let's use a green. Just going to change that one. That must be also simple. Right, simple moving averages. Shows you the dynamic, the trend, right? Now, so the purpose of the second one, and you can see, guys, you can see how clearly it shows you there is the beginning of the new trend. Was there a proper entry place? Jumped a bit higher? No. Here's the beginning of the next one. There was one. We're going to zoom in now. Just want to give you the overall picture first. Can you see how the indicators are just complementing the trend? The first one is just showing us the trend, the general trend. The other one is we're looking for the pullbacks in the trend because that helps us with the money management. Right. So what is the next one? We've got our pullbacks now. Now we want our timing. We go to the fractals, or Williams fractals, and we put in our arrows. Purpose of that advisor or indicator is the reason why I say advisor or night is you understand that if you were to watch the first one is to help you with timing. The fractal helps us with reversal points. Okay, this is absolutely developed for somebody that's in the beginning. That wants to just get started. It shows you everything. You know exactly what to do. As your insight, as your intuition develops, you can discard some of the indicators. I know most of the guys that are trading very seriously don't even need indicators because they can see these things. They can see how the trend is broken, the beginning of the new trend. Right. So what are we seeing there? We see possible reversal points there. Makes it easier. And then our last one is our momentum indicator, and that is just to give us an idea of there it is. Okay, it's 14.1. It's got a 100 line there. The purpose of that is just to give us an overview. If you've read the first one, if you listen to the first one, you'll understand. So normally, if there's a downtrend beginning, we want the momentum to be below the 100 baseline. The baseline is like a dividing point between a bullish market on the top and a bearish market below. So as you can see, let me quickly check. There is a possible entry there that is below. It's how it all fits together, plays together. Beautiful. It breaks through, pulls back. You can see there it's at the top. You see the easy entries that you get with this thing. There's a little bit more difficult. Broke through those things, but still, that was even also there a possible one. Not a very good pullback. We'll zoom in now, guys. So this is just I want you to see from afar. I want to see the picture. You see those waves, those trends. You see the possible reversal points. You see how our method makes it easy for us to identify points to enter. Look at those beautiful one there. Look at that beautiful. It breaks through, pulls back. There's even 2 points. Gives you every time an entry. Right. So let's look. That's full. Let's zoom in a bit and go to a few of them and see if we can identify a trade. Right. I see a possible one here. There it goes. It breaks through 34. It breaks through 34. Comes back. Could have taken it there. It would have kicked you out. Pulled back there. And one of the reasons, what is this? This 24-hour. Also, it's the 4 hours one. This one is the beginning of the month. So these dividing lines are weeks. So let's say what was that one? That was the 4-hour one. So that was a difficult one to catch. But if you caught that one, it would have kicked you out. Right? There was another opportunity. It pulled back there. No, sorry, it didn't. It just broke through there. It didn't pull back to the 15 yet. Sorry, guys. So there it broke through. Let me zoom in a little bit more. I can show you. There it breaks through. It pulls back to the 15. There's your what do you call it? Your fractal arrow there. Let's look. First one, second one. There's your entry. There's your 34. When you enter there, there's your 34 moving average. The entry there is 55 pips. So you put your first take profit there at 55 pips approximately. See if you can see it there. It's approximately 55, a little bit down. And your next take profit would be around about 1100. So let's see if there's that. A little bit up there. Okay, so there's one that took it. Okay, there you will break even. You waited for the pullback there. You entered there. You took your first profit there. Your first profit was break-even trade. You left it, and it took your first one. Not always going to happen. Sometimes it pulls back, it takes you out. But over a series of trades, as you can see here, this beautiful trending market. If you get a market that's like a porcupine, stay away. We need trends. We need nice trends to be able to trade effectively. That's what technical analysis is all about. Let's look at a different one. We've gone through some in-depth stuff as well now. So in the applied ones, I just want to go through these ones. We take different time frames, different currencies, and we just open it up, identify the trends, put in the indicators, and you train your brain to see those entries, because that's the entries you are gonna take. Right. That was one there. Let's delete our trend lines, horizontal lines, and let's look at another one. Okay, we took, I think we took that one. Let's look at this one. There's also one we can take. That was a downtrend that we took there. Let's go to an uptrend there. And like I said, guys, look for the easy ones. Was there an easy one? No, there wasn't. It wobbled there up and down. It is sort of like still a break, a new break. It's a bit more difficult of an entry, so you leave it. Look at this one here. Zoom in a little bit. Right, we've got our downtrend. The price is below the 34. It breaks through the 34, chuck, goes up, pulls back, pulls a little bit back there, but it closes up there. There's our turning point. We wait 1, 2. This was a possible warning. You could have decided not to take it if you like. Sometimes, depending on how the market does, I like that spike there. That's Japanese candles. I'm going to also have a webinar where I talk about Japanese candlestick supply. Where I take my strategy and I talk about confluence. Confluence means when there's multiple confirmations, and it's just easier to take the trade. So there was a pin bar there, or sort of like a hammer, or the hammer there, in that the market pushed up. So I like that one, especially because our stop loss, I might have moved my stop loss a little bit, but the stop loss is there. So there you take it. The first one, second one, you take it there. You put your stop loss there at the 34, and you've got your approximate. There you took your first one, and there you would have taken the trade out. Never went to the second one there. Okay. There was a little bit of if you want, but like I said, I like that hammer there. The sellers were done. They couldn't get it. The buyers were coming in with force. Right? There was a little bit of a confusing one. Let me just take this off. Horizontal lines. So what do you do there? It's confusion. Leave it. Look for something else. Look for a nice pullback. Nice pullback there back. So you don't have to take any trade. Okay. I think I've done about 2, 3 now. Just look at one more. Then I'm going to look at the answers. Questions there. Right, there was a spike down. It broke through 34 there. It was still, the difference between the 34 and the 15 was a little bit higher. There it went up. There it pulled back. Beautiful, beautiful, beautiful. So, second one there, you enter. Let's put it in so you guys can see. You have to train, guys. This doesn't come overnight. And you also start to see over time, this is 34 there, you see the better ones from the not so better ones. And over time you start leaving the not so better ones. Okay, so there's your stop loss there, there's your entry there, candle 1, 2, and there's your first take profit around there, and there's your second take profit around there. Yes, you did it. And you're done there, you're waiting for the next one. There's also some entries there. All right, so you can take, like I said, this thing works because there's trends on every time frame. Time frames are not good or bad, they're just different. Some high time frames have got disadvantages and advantages, as well as with the lower time frames. Let's see some questions here. Our time is almost up, but I'll go a little bit over and answer as many questions as possible. Right, fractals. Alfred, you can see how we use fractals. Fractals specifically helps us with our timing, shows us reversal points, and helps us with our entry. This is just with this method. Plans, let's see, there's some more questions. Backtest, yes, you must backtest. You must backtest this thing. First, just get the feel on paper with what is it about, what the pattern is about. It's a trend and a trend that breaks. Then you practice it in the beginning, draw in this, get an idea, get a feel for these waves. So you can train your brain to see them. And then you practice on old charts, you draw them in, and then you start practicing on demo. You're practicing your execution. Put a trade there. There's a couple of ways to do this. If it's a short time frame, you can just take one position. Like say, for example, there's one lot there. You enter with one lot, and then at 1-to-1, you take partial profit manually. But that means you have to sit there. You have to be there. If you don't want to sit there, longer time frames gives you more time to enter here. So then you enter with 2 trades. One lot is the overall positions. You take half a lot, half a lot. Same stop loss. First one take profit is there, and the second one is take profit is there. All right. Okay. Just want to mention that they don't all necessarily go like that other one to the second take profit. So what do? You are in this thing because you're expecting the new trend, and it's an uptrend. The moment it starts breaking those higher highs, they're around there even. Could leave it a little bit, but definitely there. It couldn't go higher, and now then you take your profit there. So you take, you'll have a nice profit in that trade. It didn't go to the second one, but it could not perhaps have gone to the second one. If it didn't, you would definitely, when it starts making lower lows, that's the beginning of a new trend. So there's a new entry. If there's a nice pullback, and then you can take your profit there. All right. So what I'm saying is uptrend, not an uptrend anymore. Take whatever you have. Wait for the next one. Right. It's the 15 simple moving average open or close? It's a close. I kept it as simple as possible. Right. Let's see what we've got here. Some more questions. Mainly for a sense of direction. Yes, Oswald. I want you to first see, before you start, to see the direction, to see the trends that are progressing. And that's what you do. You wait for the beginning of the new trend. That's all you do. And from there on, you manage the trade. Test it before the time. When you go to a live account, you're going to know exactly what to do, exactly where to do what. So, okay, always do technical analysis in a higher time frame and multiple time frames. Oswald, yes, I will explain that. I've got a few tips where you can use the higher time, lower time frame. But the bottom line is, if you see a trend in a time frame, you wait for a break in that time frame, and you can use higher time frames to filter. But when it comes to taking the trade, whatever time frame you see that trend where it breaks it, that's the time frame you manage the trade in. So in the beginning at least, so you can chop and change it later. But here you've got the downtrend in the 4 hours. I don't hop to any other time frame. You use the time frame there where you see the trend is where you manage the trade. Okay, there is a few ways. It's nice to identify possible trends in progress, using higher time frames and then fine-tune your entry. But for this specific method, I stick to the time frame that you see. That's where you enter. That's where you manage. Break, enter, take your profit or your loss, protect your account, whatever. Please download old charts. Oh, I answered that as well. You just work on MetaTrader. Don't download anything. Okay, can we use Fibonacci to determine the profit point, Godfrey? Yes, you are welcome. This specific method, I chose just a 1-to-1 and 1-to-2 because I cannot copy our professor's. Prof's got the ultimate trading strategy, where he uses a different strategy and he uses the Fibonacci there, 161, 261, and the 423. That also works very well with the strategy. So instead of 1-to-1, 1-to-2, you can just use the Fibonacci. But again, please, Godfrey, test it before the time and test it well. So whenever you go to a live account, then you've sorted it out. You're not jumping between methods, jumping between take profits. You know exactly, you've tested it before the time. You are profitable on a demo. If you cannot be profitable on a demo, you will not be profitable on a live account. Lots of guys don't pass that test. They don't properly practice on a demo. Some people say yes, and that is true. You can go to a cents account or Traders Reload lots. Still, you're going to lose money. You're busy practicing your executions, and you're adding the stress of the money that's involved, even if it's just a few cents. Rather practice that demonstration or practice that executions flawlessly on a demo. No stress, just easier. It's actually easier to master it than on a demo, but not playing games. Okay. Why do we use those specific moving averages? Bong asks. Ernest, I just chose them because it helps me. Because it helps me, the first one, to see that trend, the longer term trend. The second one, just to easily see the pullbacks. You can use any ones you want if you get more experienced, or if you want to change them a little bit. The bottom line is, don't fall into the trap of thinking that the indicators are going to make you profitable. The indicators will not make you profitable. And another trap that people fall in is thinking that the more indicators they can master or get to know or experiment with will make them profitable. It will not. It will just confuse you. You need the basics. You can actually trade just with drawing these trend lines. If you understand what technical analysis is about, you can trade by drawing these trend lines and just waiting for the breakout there. Remember the principles. The market moves in trends. Those waves helps us to manage our profit. That's it. So we just simply use the indicators to make it easy for us to, at a glance, to be able to see. What for instance, I talked to a trader this morning on one of my support groups, and he said he looks at 30 charts in the morning, and it just confuses him. But he doesn't want to, he wants to look at them. He wants to see. So I showed him a method of putting those 30 in a line there, and just when you train your brain to easily see, you can, in a second or two, you can see, is there a trend here or not? Is the trend busy reversing or not? Using these indicators, it just helps you to, in a glance, see it. And if there's nothing, you're done. You don't spend even more time with it, even not a second anymore. You scan quickly, you scan through all those charts, you pick the best ones, only the 2-3 best ones, you look more deeply into them, and you place your trade. That's it. Boom, clear. So if you spend too much time on a chart, if you haven't trained enough, and it's going like this, then you end up getting decision-making fatigue. You become tired. You take your brain gets tired. You take poorer decisions, and many a trader, myself in the beginning as well, you make profits in the morning and you give it all back in the afternoon. That's not nice, guys. Right. Okay. All right. Let's see if there's some more questions here. Right. There is. Edom asked if it's possible, is multiple pairs on one platform, or should you trade a pair or multiple pairs on one platform? If you've mastered your simple, well-defined method with your proper management, it's like I just said, it's possible to just scan through a couple of them in a glance. But I do know the principles stay the same for all the pairs, the commodities, the indexes, everything, because it's human behavioral patterns. That's the technical part, the technical analysis part. But the personality of each one differs, just like with people. We've all got the same physiological build, but our personalities differ. So as you work with different pairs, different commodities, you get to know that personality, and you either like it or not. So, and you eliminate the ones you don't like, that's not perhaps too spiky or whatever, and you just keep the ones that you like. It just makes it easier, and you don't need much. If you trade on the lower time frames, you can easily get 1, 2 proper trades a day and make your 1, 2, 3, 4, 5% that you want to make per day. But that's after you've mastered it, guys. After you know exactly what to do when. You've practiced that emotions out of your system. You take that trade and you don't even care what happens. You know over a series of trades you're going to make a net profit. So that's after that. Before that, when there's still emotions, you're still practicing, especially with guys that they go for a while on demo and they jump and they just start, trading with 10, 20, 30, $100 per trade. Their mental framing is not strong enough to handle that kind of stress, and they buckle. The emotions causes them to mess with the trade, and they give back, and they've got what we call a up and down equity curve. That means you must take a step back in the process, in the mastery process. Go back to demo. If you get to demo and still confused, go back to old charts. If you're still confused, go back to your paper. What are you looking for? What are your purpose in this? And it's not strange for that to happen. It's normal. That's how we start learning. That's how we train our mental framework, our brain. So you go back and forth. That's steps. You try, you learn, and you grow. If you do nothing, nothing's going to happen. Trying means making mistakes, but it's controlled mistakes. It's trying something and then learning and growing. Right. Okay. One last question, and I'm going to log off. How about Bong says, how about markets that follow trends but easily spike out the stop loss? That's what I talked about, the personality. You get markets that have lots of spikes. And obviously there will be spikes around news time. So if you're trading lower time frames, beware of news times. Not what they say, but when they come. Because you know there will be spikes in that time, and just be careful. But if the market in general has a lot of spikes, I would just stay away. So why? We're looking for trending markets. We're looking for markets with a lot of liquidity, a lot of buyers and sellers that are willing to take prices. Markets that are spiky is normally markets where the liquidity is not so high, and what happens is a big player can come in and push the market around, and those typically those spikes. In general, it will happen even in the best of markets, but less the more liquidity there is. Right. Okay, I think we're done. If you've got any more questions, let me just quickly put my email address up again. Right. There's my email address for anybody that wants to take up that Skype support group. Contact me. Let's talk. It's not possible if you're a beginner to master or to take in all these stuff. It's a lot of information. It takes time to process, and you have to understand that and relax. You're not going to become a master overnight, but it need not take years. It can take months, weeks, not very effectively, a couple of months at least. Depends on how much time you put in, how much focused time you put in. It doesn't just happen, you sit there. It will not happen when you sit there in front of the screen and stare at the stuff. You have to be actively involved, getting background stuff, practicing. If you've chosen your method, actively drawing that pattern in, getting to know it, practicing on the old charts, practicing your execution on the demo, going step by step forward, then you're proficient there, if you're flawless, your execution is flawless, you go to the small account, the cents account. That's the lovely thing about Forex time, the cents account. You open a $10 or $15 or $20 account and you've got 2,000, 10,000, 2,000 cents to trade with. It's live money. It's the beginning of the process to strengthen your mental framework step by step for the real money. But still, it's you're already flawless on the demo. So it's easy to go over to cents. The money doesn't affect you so much. It's little, and then you train through all those emotions, and then you go to a standard or ECN account or whatever you choose, depending on your strategy, and then you incrementally, slowly take it up. You make your mind, your mental framework strong, and in the end, like I said with my mentors, when I met the old guy that first showed me, gave me this gift of online trading, this tree, the picture of the tree that said, Theunis, it wasn't working for me. And he said, my roots are not good enough. My foundation, that foundation I talked about, is not good enough. You have to go back, stop live trading, go back, fix your foundation, get a simple, well-defined method, proper management, train it in, go through the mastery process. That guy was trading with, at that time, 10, 20,000 Rand. That was his 1%. But he told me, Theunis, don't look at the money. It's 1%. I started on demo. I started with cents. I started with $1, $2, $10, and just kept on building from it. So you cannot take shortcuts in this process. Take the long road, do it properly. It's a short road to success. Your cash will start picking up, and it's so nice to feel that, guys. It is so nice. Shortcuts, long road to frustration and never getting it right. Okay, so I'm gonna sign off. Thank you for listening, and you know where to contact me. Right, bye.